These are profit and loss account. Then we have a debit side and credit side here. So these are profit and loss accounts, and the profit and loss account, depreciation is an expenses. If you've been taught trading profit and loss account, so and it must be on the debit side. Any expenses, depreciation is an expenses, and it has to be on the debit side of profit and loss account. So then we charge the 4 year in the profit and loss account. So year 1, we have depreciation. The first year is 700. Then year 2, depreciation 700. Year 3, $700. Year 4, $700. So that is that for the profit and loss. Then we'll be going to a balance sheet to prepare a balance sheet statement at the end of the day. That are the 4 ledgers you have to prepare in the straight line method, and the same thing reducing balance method likewise. So we have a balance sheet here. So this is your balance sheet. Then we have a balance sheet is a statement. So let's start the first year, and remember that the first thing we need to consider is the cost of that motor car. So year 1, motor car. What is the cost? The cost of the motor car is 3,000. Then less depreciation. First year depreciation is 700 naira. So, and that is 2,000. If you less it, you have 2,000. So this is the remaining balance of the asset. But in this kind of balance sheet, you know, when you are preparing financial statement in a balance sheet, cost, you recognize it every year. You repeat it every year, and you make provision for depreciation at every year. So that's how they prepare balance. So this amount will still remain the same because it is binded by the historical concept that you must recognize it at the end of the year. If a company has been preparing an account for good 10 years, they have to recognize this cost that they bought the fixed asset at the end of the day. Then they adjust for depreciation at the end of the year. So year 2, you still have the motor vehicle, motor car, which remain the same amount. Then less depreciation. Then what will be the depreciation for the year 2? Because the first year is 700, year 2 will be 1,400. So the less it gives you 1,600. Then the same thing applies to the year 3. $3,000. Then less depreciation, which is 2,100. You less it, we have 900. You have 900. Then year 4, we have motor car, which is 3,000. Then the last year is 2,800, and that's why when you less it, you have 200. You see that at the end of the day, the scrap value of which it has been given in the question that the scrap value is estimated at 200. You get the 200 at the end of the day. So that is the value that has to be disposed at the end of the 4 years. So this is the account. This is the necessary ledger you prepare when you are asked to prepare the decision for any asset using straight line method or reducing balance method. We're going to reducing balance method, and it can also be called written down value method. Under this method, the annual charge is computed by applying a fixed percentage to cost less accumulated depreciation, which is net book value. Then the applied rate will ensure that the amounts written off continue to decrease at the end of the year. Here, you call this one reducing. You can also call it diminishing balance method. Here, you know, in straight line method, we allocate equally the same amount to the useful life of an asset. But here, it is not applied here. What we do here is that because the word diminishing means when, that means the first year will be greater than the second year will be greater than the third year, and the other year. So it is as you are using the first year that you use asset under this method, which is a reducing balance method, the percentage, the amount that will be charged will be many than the second year. And when you use the asset for the second year, then it begins to diminish at the end of the year. So that is how we apply reducing balance method. That means it will be the depreciation will be reducing from first year to second year to third year to fourth year, depending on the number of useful life, number of useful life you are given in the question. Now we go to the formula, because before you can do reducing balance method, you have to first do the formula, which is very important. And the formula is 1 minus square root of n and the scrap value divided by cost. And you need to use a scientific calculator here, because when you are given this kind of formula, you must get the percentage, because that is what you use to charge depreciation for the cost and the remaining useful life of an asset. So for you to get this, what we do is that you write 1 minus, then you find the number, that n represents number of useful life of that asset. The scrap value is the amount that is being sold off at the end of the day, and the cost is the original cost of that asset. So when we get to the question, we know how to get the percentage given the formula. So that's the formula that we follow when we are to prepare a reducing balance method. Now this is the illustration for reducing balance method. A machine costs 12,500. It will be kept for good 4 years and then sold at a scrap value of 5,120. Show the necessary account using diminishing balance method. Don't forget, our formula here is very important when you are doing a reducing balance method. So the first thing you are going to do is that you write 1 minus, remember number of years is 4 years, and the scrap value is 5,120, and you divide it by the cost. The cost is 12,500. Now you now press your calculator. The first thing you do here is you find the division of this. You divide this one by this, and which will give you, if you divide this 1512 divided by this, it will give you 0.4096. So that is what is going to give you at the end of the day. Then you take your scientific calculator. When you take your scientific calculator, then you do the cube root of this. You press the second function in your scientific calculator. Then you press 4, and then under it you press 0.40696. You will see at the end of the day you get 0.8. That is what you get at the end of the day. When you press your calculator, you press the second function and press the sign. There is a sign in the scientific calculator, this sign. That means it is talking about square root of 4. So that's how you do it. Then you press 4. Then under it, it will show a sign like this. Then you press 0.4096 at the end of the day, and then the answer will give you 0.8. Then you now subtract it from 1, which will give you the percentage, because we have to get the percentage at the end of the day. So 1 minus 0.8, that will give you 0.2. So times it by 100, you have 20%. So that is the percentage. So 20% is what you will charge. You know, in the financial information, most of the times they give you percentage in the question. So often get 20%. That is the percentage you will use to charge your reducing balance method. Before we prepare the necessary ledgers, then we want to charge the depreciation. You know, it is good 4 years. The useful life of that asset is 4 years. So we want to allocate the depreciation for each year. Remember, it is not allocated equally here. It depends on the percentage you are given and the calculation that is being done in the question. So remember, we have a 20%. That is the amount you are to charge. What you will do here is you write cost. Then after writing cost, then you write depreciation to be charged at every year. Then you write year 1. This is year 1. So you write the first year, then depreciation